Okay, one last thing before I go is my model. I failed to explain it to everybody. So this is my model in a nutshell. We get rid of the drawings. So we're gonna remember that this is London High, and we're gonna remember that this is a 3-minute Fair Valley Gap, and we're gonna remember that this is Asia High. All right. So I'm gonna remove the this indicator here. So what happens is I first start with the 4 hour, get a general idea of where we're trying to go in terms of price. I don't know why it does this, but I get a general idea of where we want to go in terms of price. How do I? Yeah, here we go. Yes. So in terms of yesterday's price action, it was really fuzzy. I believe we were here. We just came from like brimming. We came from brimming, like filling this Fair Valley Gap to the brim, as you can see there. So it was kind of inverse. We weren't looking for shorts, but much more for longs. But on the hourly, we had much more confirmation for shorts. So we were at this point in time. Sorry, and we obviously just like skimmed the 50%. I don't think we hit the 50% of this Fair Valley Gap. Yeah, we hit the 50%. Like we just skimmed the 50%, and I knew the okay price had to begin reversing. We had this structural shift made here, so I knew that we will get more towards shorts than longs. Then we have obviously this Fair Valley Gap that was created here. Price reacted. Then I was like, okay, we fully focused on longs. And then we had at 9 o'clock this candle here that came nearby but didn't take this out. But then we had that SMT that was created with silver where it was taken out. You see, so then that changed my mind for like, okay, we're gonna have a temporary long run. But then what happened was, even though that SMT was created, there was no entry. Right, there was no entry. Only if you trusted like momentum, like the fact that okay, price was closing bullish, then you would run for it and then take out Asia highs. But I was planning on taking out these equal highs here, but there was no entry. So then I knew that okay, it's a rushing to liquidity because it's not 9:30, right? I mean it's 9:40 here, but it's not 9:50, so it could be rushing to liquidity, right? So we have 9:50 here. By that time we're like in the middle of nowhere. Yes, there were market structure shifts, but there was no entry. So then we took out London high, right? So what happens for me is when liquidity is taken, once liquidity is taken, I want to see a market structure shift or an inversion. But I also want to be watching the 5 and 15-minute time frame very closely because they give me candle reaction. All right, the 15-minute, as you can see, when it interacted London highs, very, very large rejection, very large rejection. The first 15-minute candle already failed to close above these highs, so I knew that, okay, the tracks were slowing down, right? And then the second candle fails. Then I knew, okay, since we have good rejection, let's go down to the 3-minute. And then as we enter the 3-minute, we get that inversion over there. Enter on the inversion, stop at those highs, aiming to take out these lows. But then obviously we had this interference. And another thing is standard deviation. So when we closed below this low, then I projected my standard deviation. Like before you project your standard deviation, you kind of just want to be aiming nearby. So it would be safe to aim here. But once the market structure shift is confirmed, you do want to project to see how far you can go. And yeah, that's pretty much it. It's the same basis. As you can see, it's like, as we said, we tag this liquidity. It's the same thing. We see the reaction. We go down to a lower time frame. We wait for market structure shift or an inversion, and we enter, right? The model is really fractal, excuse me. So it doesn't always have to depend on session liquidity. It also depends on hourly levels and PD arrays. So as you can see, low, high, lower, low, sweeps it. And then this inversion is about to get created. And then after that, the inversion is created right here. But then instead of coming back to the inversion, there is a breaker block here that price interacts with. So boom, with that breaker block, you can have your stops here. This is if you were taking longs. And you would have your stops at the low here. And then you'd be aiming to take out Asia high, which was the theme of this trade. So if you were someone who was geared up for longs, you see, this makes sense. This aligns more with my previous bias that was existent, the idea for longs. But you can see when it plays out at 10:30, which is really not a favorable time for us because we trade macro times. So maybe looking for an entry near macro would have been much more wiser. So yeah, here's an entry near macro. There's that breaker block over there. There's this breaker. So near macro, there was actually an idea for longs. So you long here with your stops at this low, and then you're obviously aiming for Asia high. So it's still offering valid RR if you ask me, and you get your 1:2 fairly good depiction of price action right there, that like this model works, right? But like I said, we don't really enter out of nowhere. We really depend on macro, and as you can see, their macro delivered perfectly. And yeah, so that's pretty much my model, and that wraps up the lecture finally. So I've given my model out there. Whether you guys are gonna trade it, make the best of it, that's all up to you. But as for me, this lecture is coming to an end, and we depend on live markets now to deliver the knowledge. And yeah, peace out.